traders and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, European stocks rebounding. U.S. futures higher after yesterday's sell-off triggered by concerns about a U.S. recession. The VIX index of market volatility, though, remains at the highest level since 2020. Well, joining us now is Kim Crawford, Global Rates Portfolio Manager at JP Chase, and Bloomberg's Justina Lee. Thank you both for joining us. I mean, what a day. A little bit more calm than yesterday, but I still haven't figured out, Justina, what exactly the confluence of factors were that led to this. So I know it's the carry trade. That's more technical. There's, of course, concerns about AI and then concerns about a U.S. recession. But was there a real catalyst?
I think the catalyst was maybe the jobs report, and then Japan came in and panicked a bit. And right there, they were kind of also, how stretched the carry trade was. I think that really factored into the size of the sell-off in Japan. But I think a lot of that was just unwinding a lot of positions that people now think might be a bit overstretched. I'm talking about, long tech, long U.S. mega caps, maybe short vol. But I think other than that, I'm kind of skeptical as to whether the fundamentals have changed so much. And I think that's why we're seeing a bit of a rebound today.
Yeah, and I guess one of the things that, we're pointing to yesterday, Kim, that was working okay is that actually bonds behaved as they should. So if you looked at what equities and bonds did, I don't know whether it kind of goes back to a more normal market behavior.
Yeah, I think it's right. For us, the base case is still a soft landing. You talked about the labour market report triggering the big moves. But we think, there could be some noise in that data. Maybe the incoming data is going to show us more of that was noise around a still very gradually slowing trajectory. I think what's important for the bond markets and maybe broader markets as well is that the Fed is already very attentive to risks around the labour market. They've got a lot of policy space if they need to use it, especially since the disinflation narrative is firmly intact. And they will use it if they need to. I like to think of the analogy of a skydiver. You don't wait till you're less than 2,000 feet from the ground to really deploy the parachute. So I think if the labour market doesn't show, the broad mosaic of the labour market doesn't show any improvement by the September meeting, then a 50 basis points cut could be on the table from a risk management perspective.
So, Kim, how many interest rate cuts are you expecting overall? And there's quite a big chunk of the market that's still pricing in some kind of emergency meeting, and I don't know whether that sows panic in the markets. Yeah,
I really don't see the need for an inter-meeting emergency cut. I think the problem with that is that it really sends a challenging narrative for the market. It will fuel negative sentiment, and the Fed ultimately is data dependent, not just data point dependent. They're going to need a lot more labour market data in order to pull that trigger. I think maybe, a really huge move in financial conditions is something that they will be attentive to, which causes an intermeeting cut, but it's not our base case, and we do think that they will wait for more of the data.
Justina, when you look at VIX, it still remains elevated. So again, we're off the kind of panic that we saw yesterday, but things aren't looking necessarily, that they'll go up.
Yeah, it was pretty crazy because at one point, I think the VIX actually spiked the most ever yesterday. And I think what this reflects is there are a lot of investors that are scrambling to add index hedges right now. And I think another dynamic here is that kind of before the sell-off, there were a lot of short volatility positioning. So maybe some of that was getting unwound, and that meant people were buying hedges again. But, you're right. The VIX is still at the highest since 2020 today. And I think that just kind of shows sort of the level of concern still in markets right now.
So yesterday, we also heard from Mary Daly from the San Francisco Fed president, basically saying that the labor market is softening and indicated that the Fed should actually begin cutting interest rate in coming quarters. This is what she said.
From my mind, we've now confirmed that the labor market is slowing, and it's extremely important that we not let it slow so much that it tips tips itself into a downturn.
So Kim, basically, she emphasized that, she still sees strength in the labor market, that companies, have slowed their hiring, but they're not cutting jobs yet. So does that make it trickier to try and understand the strength of the U.S. economy?
Yeah, I think you've got to look at it in an aggregate sense. We speak to our corporate analysts daily, and the broad message from them is that there is a slowing that's well understood by the markets, but any sort of firing is going to be still a few quarters away, and a few quarters is really key. So we do think that you could see a bit of a recovery in the labour market. The payrolls print could be a bit of noise. And because of that, we do think our base case is about 50 to 75 basis points of cuts for the Fed this year.
So what does that mean for how you build your portfolio right now?
Yeah, so we've had a huge move in bonds. I have to say for the last few months, owning bonds, being in curve steepeners, the risk reward looked good for us because they provided sizable income and you own that entire tail of the labor market. Maybe the possibility of it loosening more non-linearly. But, the markets have moved very far, very quickly. We don't think the whole move has been purely fundamental. We talk about August liquidity conditions a lot with a lot of risk takers on holidays. So we think here right now you've got to be patient and wait for backups and use those as opportunities to add back to those core positions.
I don't know whether it's unfair, Justine. The BOJ got a lot of criticism of what they did last week. I mean, they're also trying to kind of do their best. Is the criticism fair, and does it influence policy going forward?
Yeah, I think it's difficult, right? Because obviously it's unfair in the sense that a lot of this was a reaction to how stretched the carry trade was and maybe a lot of the equity positions was. But I think that I guess you could say that, should they have thought a little bit more about the market reaction? But I think at least, coming in today, I think what's going on is a lot of Japanese traders are looking at what happened overnight in Europe and in the U.S. And at least it wasn't as panicky. And that's why we're seeing such a big kind of rebound today.
Yeah, and there's a big meeting today, right, with the finance minister, the BOJ and other officials.
Yeah, I mean, they're going to be paying attention to a lot of that. I mean, we also kind of had a bond auction of Japan today. Yeah. That was also showing pretty weak demand. And also they're going to be paying attention to kind of the violence of kind of these currency moves as well.
How do you play Japan right now?
Yeah, so we've had lots of volatility there. I think from here, probably what looks the most interesting is the curve flattener. We've taken out a lot of those hikes in the front end already. So if the global narrative does worsen, I think Japan 30-year yields at 2% doesn't make much sense. But I think if the global narrative at the same time calms down, we could get those hikes back on the table and then the curve could bear flatten.
The other thing, Kim, that we haven't talked about yesterday in all of this panic is actually, does it change the market view for ECB and BOE given the gravitational pull of the Fed?
Yeah, I think obviously, if we go into a big material U.S. slowdown, I think obviously straight away through the financial conditions impact, it does affect global central banks. But I think with the market calming down, our base case is still a soft landing. We don't think it's going to really change the narrative for the ECB or the BOE. Think consecutive cuts from the ECB possibility, but we think more quarterly still. The recovery and the growth narrative is definitely challenged, but not so that they need to go so quickly. And the BOE story is really tricky. I think the most interesting question there now is, are we going to get this growth boost from the new Labour government?
Yeah, many question marks, given we also spoke to Rachel Reeves yesterday, but we'll get on to the UK in a second. I mean, what are you looking for today, Justina? I know there's this, the Treasury is probably front of mind. Commodities. Yesterday, we were also talking about crypto.
Yeah, I mean, crypto was pretty crazy. Again, it was a reminder that, even after kind of all this talk about it being digital gold, at the end of the day, it's, so tied to risk sentiment. And so I think people are going to be paying attention to that. I mean, yesterday, we kind of saw a big risk-off rotation, into quality stocks, low risk, out of small caps. Is this still going to be the market action today? I think that's sort of another question.
Okay, Justine and Kim, thank you so much for joining us. Kim Crawford, Global Rates Portfolio Manager at JP Morgan Chase, and Bloomberg's Justina Lee. Now, coming up, Google is found to have unlawfully monopolized search in a landmark DOJ case. More on that next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, we'll return to Kim Crawford from JP Morgan Chase in just a moment. But first, a U.S. judge has ruled that Google illegally monopolized the search market through exclusive deals with Apple and others. Now, Google plans to appeal the ruling. Let's get more on this and all things tech with our Tom McKenzie. Tom, I mean, this feels like a really big deal for Google.
It is a big deal. This is the first antitrust case, major antitrust case, against a mega-cap tech company in the U.S. for about 2 decades. And it's a win for regulators, for the authorities in the US. Now, Google, Alphabet say they will appeal, but it's very clear from this ruling, and I've read through it, the top line coming through, Google acted as a monopoly. That's very clear. It's written in black and white. They're going to appeal this, but what they come down on is essentially Google's exclusive deals with the likes of Apple and Samsung, the hardware makers, of course, to have Google's search engines the default search engine. That has allowed Google to raise prices for advertising consistently without facing that competitive threat. There's potential downside for Apple here because they won't get that revenue stream, because what Google was doing was paying about $29 billion a year to Apple, to Samsung and others to have this exclusive agreement to have that default search engine for those handset makers. So it's a potential loss of revenue for the likes of Apple and Samsung. And what could happen, and it's got another case that's going to come through in terms of how they rectify this, is they could be broken up. Google could be broken up from Android and Chrome, which would be very significant, or they could be forced to unwind some of these exclusive deals. So there's some question marks remaining, but the top line is this is a significant win for the US government in this major antitrust case. And again, Google, Alphabet saying they will appeal.
Yeah, so we'll see how this plays out. NVIDIA, I mean, this was one of the biggest stories of yesterday because it slammed so much after rising so much. What do we know today?
So the details around NVIDIA, I mean, the timing was just totally off, wasn't it, in terms of when this reporting came through? Nothing that NVIDIA could have done about that, arguably. But at the time, of course, of this market rout, the news that NVIDIA is struggling to engineer the next iteration of its AI accelerator chips called the Blackwell. Currently, they ship something called Hopper, which is its AI accelerator, to their customers, who include, of course, Microsoft, Alphabet, Amazon and Meta. They're coming through with the next iteration, and they're innovating around it. But it's hugely complex, and there are delays in terms of how they're building out these new chips within the Blackwell box of units they're going to be shipping to their customers in the second half of the year. NVIDIA say they're still on track for that. Analysts say don't panic. The revenue streams are still there. They still aren't able, NVIDIA, to actually match the demand. They're still not able to produce enough chips to match the demand. They see that going through 2025. But it's a reminder of the complexities of this innovation, and it's going to come down to timing around the fixes. So that's something that analysts say, watch the timing. Can they fix this? The bottom line is the demand for these chips remains.
Yeah, I mean, I was looking at the share price. If you look at over a year, I mean, it started at 40. It's now at 100. At some point, it was 140. So you kind of have to put the general context in longer-term share price. And then finally, Palantir. I think it's gaining some 11% pre-market.
Yeah, I mean, look, if you have concerns about whether the AI trade is continuing to work, and we had some question marks over the earnings that came through from Microsoft and Amazon last week, then Palantir has a clear run in terms of the demand that's coming through from AI. At least that is the takeaway from these earnings. And the CEO, Alex Carper, saying this is an historic. They've raised their outlook, and it's down to AI software around data analysis. They sell to commercial enterprises and governments as well. They saw an increase overall in quarterly revenues of 27% year on year. They've seen an increase for the commercial segment of about 33%, an increase of more than 20% for government. So the military and the Pentagon, big customers of Palantir, and they say it's about their AI software, and that demand has led them to raise their outlook.
Fabulous. You can see Palantir gaining some 11.2%. What a terrific briefing looking at all things tech. Tom, thank you so much. Tom McKenzie there with the very latest on Google, Palantir, and, of course, NVIDIA. Now let's return to Kim Crawford from JP Morgan Asset Management. Kim, when you look at some of the things that we were talking about, so we talked about the Fed, we talked about BOJ extensively. I mean, the BOE is in a little bit of a troubled spot, I guess, because so they cut for the first time. That was smooth, but then we don't really know what's in the budget from the new government.
Yeah, it's going to be a big piece of the puzzle. The way we think about it is always what's the net fiscal impulse of all the policies that Labour is going to announce. So Rachel Reeves has been really steadfast so far that she's going to stick to the fiscal rules. That means tax hikes are coming in the autumn budget. So net fiscal impulse should be pretty neutral, slightly positive, which small boost to growth, but nothing material that will change the BOE's course. I think the more interesting question for us that's harder to nail down is, are we actually going to get a sustainable boost to consumer confidence, to business optimism that will trigger investments? And I think a big wild card as well is Labour's housing policy. Yeah. You know, loosening planning restrictions, but putting the burden on the private sector to really boost building and construction. And if that pulls through, then you could see a bigger impact on growth.
But, Kim, when do we again start knowing that there's always a bit of a timeline problem, that this actually takes a lot longer, which is why they have a 1-year spending review instead of like a 3-year one, see also what the OBR says?
Sorry, say again?
When the OBR, I mean, they kind of need to see
Yeah.
what kind of growth and how much money they have left. So they're, I guess, in a wait-and-see situation for about 6-8 months?
Yeah, I think it's wait and see. I do think the autumn budget, you get those tax hikes with those new policies on spending. But I think the Bank of England, you know, I guess the broad fiscal room is still going to be quite tight unless you get a material move in bond yields or the growth picture changes materially.
Kim, thank you so much for joining us today. That was Kim Crawford from JP Morgan Asset Management. Now, coming up, we heard from Chancellor Rachel Reeves. She says the UK will strike the right balance at the budget, but she will not rule out increasing capital gains tax. So we'll have plenty more from our exclusive interview next. And this is Bloomberg. Now, the UK Chancellor Rachel Reeves says she will not rule out increasing capital gains tax after warning that difficult decisions will be taken to fill a £22 billion gap in the budget. In an exclusive interview, she told us the UK will strike the right balance on tax at the budget in October.
I think people should pay their fair share of tax, and one of the challenges we have in the UK is a gap between what should be collected by His Majesty's Revenue and Customs and what is actually collected. But we made a commitment in our manifesto that we'll be sticking to, which is that we don't want to increase taxes on working people, and we will be keeping income tax, national insurance and value-added tax at the rates they are for the duration of this Parliament. I would like taxes on working people to be lower, but I believe that you can't make promises without being able to say where the money is going to come from. But the tax burden in the UK has got too high. The tax burden in the UK is at a 70-year high. I want to bring that tax burden down because I want to make Britain the best place to start and grow a business, and I want working people to keep more of their own money in their pockets, and that's what people will have with this new Labour government. And it's why it's so important that we grow the economy, because the last few years in the UK, there's been lots of debate about what level of taxation and what level of spending, but it's missed the bigger picture.
Yeah.
And the bigger picture is growing the economy.
Well, as you mentioned, income taxes there, Chancellor, I wonder, given the revenue it potentially could generate, if you're tempted to bring capital gains taxes in line with the income tax, is that something you're considering?
We've got a budget on the 30th of October and we'll set out our policy then. But it's always important when you're deciding tax policy to strike the right balance. Of course, you need to bring in the revenue to fund vital public services, but we've also got to grow the economy. And I won't do anything that makes it harder to achieve that economic growth and prosperity, because in the end, the only way we're going to lift living standards for working people and have the money that we need to invest in our public services, whether that is our health service or our schools or indeed our police and our armed forces, is by growing the economy. And so I am determined to ensure that when we set all of our policy, including tax policy, that we're not doing anything that will deter the investment and growth that we need to see in the UK economy. But we'll make decisions around tax and around spending at the budget and the spending review later this year.
That was the UK Chancellor Rachel Reeves speaking exclusively to Bloomberg. Now, the UK government says foreign states may be involved in fueling a wave of right-wing riots across the country. The Prime Minister, Keir Starmer, says they'll mobilise a standing army of police officers to deal with the violence. Now, the unrest has been fueled by online misinformation following the murder of 3 young girls last week. Starmer's administration has also slammed a post on X by Elon Musk that civil war is inevitable in the UK, saying there was no justification for the billionaire's remark. Coming up, stocks rebound after Monday's sell-off, but is this just a brief respite or a sign of things to come? More analysis next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. European stocks bouncing back, U.S. futures higher after Monday's sell-off, capping a 3-week rout that wiped more than $6 trillion from global equities. A U.S. judge rules Google illegally created a monopoly of the search market by making exclusive deals worth billions of dollars with companies including Apple. Plus, Kamala Harris formally wins the Democratic nomination, the first black woman and Asian American to lead a presidential ticket for a major U.S. political party. So Monday's sell-off wiped $6.4 trillion off global markets in the last 3 weeks, sowing fears that it could be the start of a great unwind. Now, here's how Bloomberg guests have reacted.
The market got carried away by demanding intermeeting cuts. It's not going to happen. The Fed will look at the economy and say, yes, it's weakening, but this is not an emergency situation such as the ones we've seen before.
I wouldn't have expected the market to react with such a haste and panic the way it did. And so I think that the Japan story, the carry trade, is actually what's causing a little bit of chaos in the markets. And I think that, there really has been an immediate reaction to that.
We're getting closer towards the end of this kind of manic kind of price action because it was very much driven by technical factors.
It's good to see that today we have a rebound in the markets, and hopefully this breaks the fever. But I think we're still in fairly uncertain terms at this point in time, given that in some of the regional markets, we're actually still doing quite well on a year-to-date basis, and investors are sitting on profits, might be taken to take some off.
Well, European stocks recovering slightly after yesterday's rout. The Nikkei in Japan ended the session up more than 10%. That's bringing Emmanuel Cau. He's managing director and head of European equity strategy at Barclays. I imagine, Emmanuel, yesterday was a crazy day on the trading floor. I know there's a couple of factors. It's AI. It's, of course, the jobs report on Friday. It's a lot of the things that we talk about in terms of technical and the carry trade. But is this the start of something ugly, or is it more of a blip?
Well, we think it's more of a blip, Francine. I mean, the market was hit by the perfect storm. You have three main narratives going on. You have the recession issues, which was triggered by fairly soft data in the US and some cautious commentaries from companies on the US consumer. You have this unwind of the JPY carry trade, which has broad ramification for risk assets. And then you have this kind of concern about AI and the hype around very well-owned names. So all this happening in August probably was creating this stress in the market. You have very low liquidity, very low attendance, and we've seen some, I think, exaggeration of the growth scale. Look, I think the erratic price action might persist for now because not all this leverage position have been clear. I mean, when you see VIX going up as much as it did yesterday, you would expect some damage. You would expect some leverage position to get hit and triggering more unwind. So I would expect the unwind of some of this position to carry on in the next few days. And look, you still have a fairly uncertain outlook with mixed earnings, mixed macro. You have the US election in sight as well. So all this, I think, will contribute to persistent angst in the market, but we don't buy into this growth scale. We don't buy into the hard landing scenario, or view that the soft patch should not be, misinterpreted and taken for as a recession. And we would expect some stability to resume at some point.
So, Emmanuel, what's the next catalyst actually for some of these European equities? Is it still the Fed because of the gravitational pull of the Fed? And from what you're saying, you're not expecting an emergency meeting where they cut this week.
Look, I think it's more about the data than the Fed. I mean, we don't buy into this kind of recessionary concerns. But look, some of the data flashed red last week. So yesterday, ISM services were a step in the right direction. We had a bit of a pickup in services and employment, which was important. I think jobless claims on Thursday would be also quite important. You don't want to see more weakness in the labor market. And I think the next big thing would be the US CPI on Wednesday next week. Obviously, if you see a bad surprise and a hot CPI, that might put into question the Fed cut, which are priced in. Now, I think there's a very high bar for the Fed to cut between meetings. I don't think the Fed has reason to respond to this market stress. Fed has to tolerate some degree of stress in the market, but we don't see a meaningful issue that will put the financial stability into question right now. So I think the Fed should wait for September to cut rate, and I think Jackson Hole will be the next catalyst where we would expect central banks, whether it's the Fed or the Bank of Japan, to tell us how they are going to process from here.
So, Emmanuel, a lot of blame has been done, actually, in the BOJ, and I don't know whether, again, it changes the way that you view policy in Japan going forward, and therefore that impacts European equities.
But we think yet at 145 is much closer to fair value, probably much closer to what the Bank of Japan had in mind. I'm not really sure the Bank of Japan will tolerate a much stronger yen here, which I think would start to be an issue for Japanese exporters in particular. Right? I think the Bank of Japan communication will have to be adjusted accordingly. And again, on the other hand, we don't buy what the market is pricing in for the Fed. We don't buy the view that the Fed is going to cut 5 times by the end of the year, which seems to be too aggressive to us. So I think yen between 145, 150 should be the new range. And if we manage to stabilize, I think that might help stocks finding a floor. Yen has to stabilize for risk asset and equities in particular to stabilize as well.
Is this the right time to go bargain hunting? And if yes, are there specific sectors that could be a good opportunity right now?
Yes, we think it is the right time to go bargain hunting, more at the stock level than at the broader market level. But I think some of the derated quality cyclicals that have gone down in sympathy with the broader market, maybe because of positioning, look interesting. I would think that things like, part of tech look quite interesting to us again. Some of the banks, which went down a lot in the last couple of days, look interesting. Some of the industrial names, we still like, a number of defensive sectors like utilities as well. So we want to hold a fairly balanced portfolio. We cut risk before summer on the view that the risk reward was getting less favorable. We stick to this view. We don't want to be too risk on into the fall. But look, you have to listen to the market and you have to use opportunities when they arise. And we do think that tech, among other things, look quite interesting at those events.
Emmanuel, what do you do with tech overall, though, at the moment? And again, it's, I know there's questions on NVIDIA. That was maybe unlucky because it was a market sell-off. But we also had Warren Buffett cutting half of his stake in Apple. Again, is it a coincidence, or are there bigger question marks about the rapidity of AI and what that means for some of the European providers?
Look, the bar for positive surprise is much higher now for the broad tech and AI space. It's very hot. It's quite crowded in some cases. And market wants to see the money. Market wants to see the numbers. Look, the reporting season was a bit of a mixed bag. But generally, we are still seeing AI spending trending upward, and that should support some of the names like SML, which as a house we turned overweight on very recently. We used a dip to buy SML last week. We think NVIDIA should still deliver relatively good guidance into next year. So again, I think the market will need to see more fundamental from here. And I think NVIDIA earnings on the 28th of August will be quite important. But look, ASML down 30% from the rise. It seems a good opportunity to us because we think the broad AI story is still very much intact.
Emmanuel, what's your take on the UK? So we spoke to Rachel Reeves in the US yesterday. And again, she declined to rule out an increase in capital gains tax, but her strategy seems to be well laid out.
Look, I think you have two main stories for the UK. You have the FTSE 100, which is an index that has benefited from this risk-off and flight to safety because the FTSE is underweight tech, is a very defensive index. So if you need to hide somewhere, the FTSE 100 should do the job. Now, the more domestic part of the market is where we think there's a bit of a more long-term story in terms of policy growth, mix improving. We think political visibility and the prospect for Bank of England to cut rate more down the road should help to restore confidence in the UK economy and to attract foreign money back into the UK. We are seeing strong interest from global investors towards the UK. Valuations are still looking very, very cheap. And we do think that the case for bounce in the economy on the back of this improving growth policy mix should help some of the under-owned part of the market, whether it's some of the banks, some of the house-related names, some of the consumer names, staples, food retail. So we quite like some of the names there, but we're obviously selective on what to buy.
Mm-hmm. Emmanuel, thank you so much. Emmanuel Cau there, Managing Director and Head of European Equity Strategy at Barclays, joining us on the back of this big sell-off yesterday. Now, coming up, we talk U.S. politics. Kamala Harris clinches the Democratic nomination, setting up a November election against Donald Trump. More on the race for the White House next, and this is Bloomberg. Welcome back, everyone. Now, Kamala Harris has formally clinched the Democratic nomination for president after winning a virtual roll call. Next up, a decision on her running mate. Now, let's discuss all this with Bronwen Maddox, Chief Executive of Chatham House, and Rosalind Matheson, our Bloomberg's EMEA News Director. So thank you both for joining us. Bronwen, let's start with you. What's the next step for what Kamala Harris needs to do? So, of course, there's a running mate that she needs to pick. Does that person need to go after a different demographic to what she appeals to?
I think the focus now is on how that running mate, that choice of running mate, plays in some of the key states that are really going to determine this election. And that's why everyone has been looking at Josh Shapiro, Governor of Pennsylvania. Very hard to see how she wins without securing Pennsylvania. But of course, you have the Mark Kelly and the Tim Walz calculations in there as well. I think it really comes down now to that microscopic analysis of what the running mate does in those states and what it also does in the broader message about the party. Josh Shapiro is acclaimed to be represent the future of the party. Older candidates, not so much. So, it's down to all that. I must say, from the perspective of other countries looking at this, and I'm speaking from London, they're really just focused on the tightness of the presidential race. So the vice president matters less, except how it determines those chances in the end.
So, Ros, how do I look at the polls? Again, there are a number of polls, and actually, speaking to people, they say, well, is the U.S. really ready for a female president? But then the polls suggest that she's doing quite well in the swing states, but we're exactly almost 4 months away per day to that election.
Well, that's right. So she's had a bounce in recent weeks, and now, of course, when she was the presumptive nominee, now she really is the nominee, and she's had a bounce. There's a lot of money flowing into the Democratic coffers as a result of that. The question is, how does that last? Does it last? How does it translate into particular states? As Bronwen was saying, the VP pick matters in that numbers game, and then they're going to both be out campaigning. And once she's on the road properly campaigning, how does that look like in terms of her numbers? Do they hold up in those key states? Does her VP pick help her in that? Does Trump, bring some of those gains back? The concern is, does she have this early momentum now? But, the coming months when she's on the road campaigning, potentially debating Donald Trump, also, does that lead get chipped away again? It's really within the margin of error at the moment. So it's pretty tight.
So, Bronwen, who's she polling well with? Is it, the young folk because of her memes? And actually, she got endorsed also by a very popular UK rapper. Is it, the Black Caucus? And where does she need to work?
It is some of each of these. And I think some of the strength in those groups you've mentioned has taken her own campaign a bit by surprise, and certainly taken the Trump campaign by surprise. So it is where she can make inroads into the support that Trump appeared to be getting. But of course, Trump is not neutral in this. He's done his part in the past week or so to jeopardize his support among the black community with some of his remarks that now very well covered in interview with black journalists. She's just probing for weaknesses there. And I think it really comes back to the swing states. So it is what really matters there. That's where some of the debate about Josh Shapiro comes in, because they're saying, does his support for Israel compromise her ability to appeal to those, not just Arab Americans, but those who are critical of Israel's actions against Palestinians?
Roz, at the same time, and we'll get into policies in a second, it does seem to have energized, right, the Democratic camp in general. I mean, they saw a record number of donations, I think some 310 million just for the month of July, and there's many more volunteers. Does money really matter 4 months before the election?
Well, it certainly does matter. It matters particularly, again, for those swing states and for advertising, because you need to, blitz the airwaves with TV, on social media. So really it's going to help her campaign in those swing states, depending on where those funds get diverted. But as you say, it was really also a factor of, again, in a way, that sense of relief for the Democrats that Joe Biden made that decision to step aside as the candidate for 2024, to give her that runway to build momentum for her campaign. There'd been so much talk for weeks and months about his health, whether he'd be able to sustain, the election another term as president. So you got that relief sense that came in, and a lot of money coming as a result. Again, the question really is, how do you sustain that into November?
And again, one of Bronwen's very good points is that when you look at policy, I mean, what are her stumbling blocks? Is it, Israel, Gaza, immigration, which is really the portfolio that she was in charge of?
Well, a lot of Americans vote on, like many countries, bread and butter issues primarily. So it's the state of the economy, it's wages, inflation, their own sense of their own personal circumstances. And she's vulnerable there on several issues. She's not really being tested on economic policy. That's been the domain of Joe Biden and others. She was also assigned that very tricky portfolio in a way of migration from the outset, and how you don't, navigate that without falling into difficulty. And she has. It's really an impossible portfolio to have. And so she's quite vulnerable to attacks from Donald Trump on that front. Where she can come back, of course, is on things like abortion, where she's been very, very forceful, and that could be a good vote winner for women as well. So she does have some advantages on policy, but also she's going to be tested on how she would drive the economy if she were president.
Bronwen, how's the Trump camp actually organizing themselves? I know that there's been a lot of focus on Senator J.D. Vance of Ohio and some of the past things he said.
Absolutely. He looked like a very strong pick for perhaps the first 48 hours. Many people thought, look, here is someone, a younger Trump with longer and sometimes better words than Trump has himself. And then the extremity of some of the things that he was saying, his potential to alienate voters, also came into the spotlight. So, he's not a neutral factor. But the Trump campaign has seemed disconcerted by the momentum behind the Kamala Harris campaign, really disconcerted by the swing of attention from Joe Biden's health to suddenly this younger candidate. Now, if she's going to turn this round, she does need to address those two things that we were just talking about, the economy, but she can point to the rate of economic growth, which I can tell you many other countries would be very envious of, particularly those in Europe. She can point to the growth in jobs, even if that is slowing at the moment. And she can also say, even if it sounds a bit defensive, look, I didn't have the whole immigration southern border portfolio. I had a roots portfolio trying to deal with the causes in those countries. This is my strategy for dealing with that border. And now let's talk about whether it's abortion or the strength of the economy compared to much of the rest of the world. So there is a way in which she can play it. But she has to make sure that her vice president is speaking to the same script.
Roz, when you look at the Trump camp, first of all, does the presidential debate actually weaken him? And I know there's been, his vice presidential pick is really mocked online, but Trump still continues to pull ahead of his numbers from 4 years ago.
Well, that's right. The question is, will he face her in a debate? He's been a bit defensive about it, a bit coy about it. As Bronwen was saying, he's probably a bit spooked about the fact that he no longer has the issue of Joe Biden's health to really campaign on. He also has to campaign on some sort of agenda, at least. And we don't know how they'd go head-to-head in a debate. I mean, she's a prosecutor. She's very good in the minute. He is also, a pretty good debater, mostly because he just steamrolls over his opponent in the minute and just sticks to his big points, his talking points. So it'd be interesting to see them in a head-to-head. But she could hold up pretty well, and that's why we're seeing all this dance around will they or won't they debate, and that would be a really key moment in the campaign if they do.
Roz, thank you so much. Chatham House Chief Executive Bronwen Maddox and Bloomberg's Rosalind Matheson, of course, on the implications in the U.S. Now, coming up, Aramco keeps its $31 billion dividend despite reporting lower profits, so we'll have plenty more on the oil giant's earnings. This is a Bloomberg. Well, Saudi Aramco has maintained its quarterly dividend at $31 billion despite lower profit. Now, the payout from the world's largest oil exporting company is key for Saudi Arabia as crude prices remain far below the levels it needs to balance the country's budget. We're now joined by Bloomberg's Jumana Bersace. Jumana, thank you for joining us. So how do these results actually compare to expectations?
Yeah, well, you're seeing a positive price reaction in the stock this morning, Francine, which tells you that they are basically in line with what the market had penciled in. Net income about 3% lower year on year. Revenue slightly lower than analyst estimates. But a lot of takeaways have come through from these earnings. Namely, they are seeing some of the positive tailwinds that other names in the sector are reporting. That is to do with pricing power. Obviously, the price of oil for the quarter was higher this year than it was a year ago. That has helped the sector as a whole. But specifically for Aramco, one thing is pushing these results down, and that is the fact that they have lower production. They are pumping 9 million versus a maximum capacity of 11 million barrels per day. That is posing a bit of a headwind to their overall revenues. In addition to that, much like other names in the industry, they're seeing some pressure come through on their refining margins. But the Aramco CEO has just said that he doesn't expect those pressures to continue into the third quarter. Finally, and probably the most important thing for investors and for the Saudi government, they have maintained that dividend payment of $31 billion for the second quarter. This despite the fact that net income has dropped about 3%. And of course, it is a crucial source of funding still for the Saudi government, which has about a 97% stake in Aramco.
Jumana, thank you so much. Jumana Bersecha there, Bloomberg Horizons Middle East and Africa anchor. Now, very quickly, let's just look at some of the U.S. futures. A lot going on after yesterday's sell-off. So for the moment, we're seeing gains across the board. S&P futures gaining 1%, as is the Nasdaq. Here in Europe, we're seeing indices gaining 0.4%. So we're certainly not recouping some of the terrain lost yesterday, but there is a lot more normalcy returning to these markets. Up next, Bloomberg Brief with Maddox in New York, and this is Bloomberg.